So, Aaron, on the other side of this is value. I happen to think a lot of these value names are overvalued in relative terms. Now, you've been really smart. You were one of the first who made the big shift in that direction. Are you making any new adjustments now, though, to your portfolio?
No, right now, Charles, actually, I'm squarely in the middle. So no overweights towards value, no overweights towards growth. I think the value growth shift has been so dramatic in the past 2 years. We basically had them shift leadership twice, each time leading. And I think right now, looking at historical valuations, value indexes are trading at about a 6% premium to their 5-year average. Growth is trading at about a 5% premium. There's not a big difference when looking at where they are valued historically. So given that we're in a rising interest rate environment, I think we really should be very careful about overweighting in either side just right now.
Speaking of consumers, right, and things like Huffy, apparently we spent $335 billion just last month alone. That's up 17% according to Bank of America. And you know, I guess it suggests that we are paying up. That Aaron, you know, we do buy things based on pricing power, whether it's Tyson Foods, whether it's some of these other things. So are you still looking at ideas that have the ability to raise prices and pass it on seamlessly?
Certainly. I was a little more focused on the B2B side, but on the consumer side, there are definitely some winners out there. I think one area that is obvious or seems, a good story is home improvement. I think Home Depot and Lowe's, they trade very similarly. You could buy both or either one. Are able very easily to pass higher prices, whether it comes from their own products or simply from their suppliers. And so the home really has been an area where we've seen a lot of spending, whether it's a suburban sprawl or homeowners realizing they can't afford that new home with higher mortgage prices, and they just maybe need to renovate their own home. So I think that's one safe bet going for the next year.
Let's talk about Peloton, right? Because there's a big, apparently, perhaps a bidding war. Some people like to see one. Apple, Amazon, Nike, all apparently interested. Aaron, are there other names out there that have been beaten down? Like, I'm looking at PayPal. I think PayPal could be a ripe takeover. But before you answer that, the audience should know Apple sitting on $200 billion, Alphabet $169, Microsoft $132 billion, Amazon $96 billion, Meta $48 billion. That's $600 billion in dry powder if they want to take anyone over. Could we see some action here, Aaron?
Certainly. I mean, we know that some of them are really struggling, and that a lot of the way to achieve their high growth targets are through acquisitions. And not sitting on cash isn't the most useful way of using your assets. So those are always going to be potential acquirers in any merger rumors, particularly when it comes to the tech and sort of new age. But yeah, I do think there's some opportunities out there. I was looking at Overstock. .com as a possible acquisition target. I mean, it's trading well below its target price. It's less than half of its Wall Street analyst target price. Yeah. It's really gotten beaten up. It's looking cheap. It's just a matter of a company that's strong enough and able to manage an acquisition and not have their stock price get too hurt.
Yeah, of course, Overstock has had the famous CEO, and I think